Hi traders, it's Eddie here from TradeView and welcome to Trading Talk episode number 196. Well, we're on the eve of another 7-day lockdown here in Melbourne. Good times. If you're a Melburnian, don't worry, we've got a great Trading Talk episode for you today. We usually don't talk about results, and before I show you some live trading results with real money using the model from Trading Talk episode 188, it's really important to understand that any past performance is no guarantee of future results. And even though we did get some great results with this model, we're not saying that you'll get these great results or that you should trade the model at all yourself. And you certainly shouldn't attempt to trade any model unless you have tested it and fully understand how it works and all the risks involved first. That said, in this episode, we'll discuss some key aspects such as the position sizing we used, margin requirements, and what was involved in setting up and managing the model. I'm pretty sure you'll really enjoy this episode. Now, if you like this episode and you'd like to see some much more detailed and finessed concepts created by some of the world's best traders, then you should get yourself a ticket to this year's Algo Trading Conference, where professional traders Perry Kaufman, Trevor Neal, and Stefano Serafini will show you how they build and manage models themselves, and you'll get to take home a fully automated model from each of them on the day. We'll probably make this particular episode of Trading Talk available publicly, so you might not need a subscription to watch the full episode like usual. And if we do, just click on the link in the description or log into TradeViewX if you're a member to watch. If you'd like to see the full rules of the model, make sure you watch Trading Talk episode number 188, which you can do when you purchase the series by clicking the Learn More button at the top left of this page, or in the YouTube description if you're watching this video there on YouTube. Now, if you enjoy our videos, make sure you like and subscribe to our YouTube channel so that you can get more of what you want. I really hope you enjoy this week's episode of Trading Talk. Stay safe, and until next week, all the best with your trading.
Hi traders, it's Eddie here from TradeView and welcome to Trading Talk episode 196. This presentation is provided for information purposes only and you shouldn't regard it as financial product advice. It doesn't take into account your specific financial situation or needs, and any performance that we show today in this episode is no guarantee of any future returns. If we do show any results, they have certain limitations. These are actual performance results in this case, but we're not making any promises or guarantees or representation that any account will or is likely to achieve any profit or loss similar to that shown in this or any other episodes. Okay, so this is a really interesting episode. We don't talk a lot about performance in these Trading Talk episodes because we want you to build the models and to run them yourselves and learn how to manage them and all that. But in this particular case, what I did was I took an episode that we built, which was episode number 188, and I set it up on a small live trading account with $1,000, and I thought I'd just run it and see how it went so that I could show you guys who keep coming back and watching all these episodes what is actually possible with building automated models and trading them. And I thought I'd give you a little bit of an insight into how I managed the model. We ran it for about a month. It's actually still running. I just thought I'd give a little bit of insight into how I ran the model and how it's performed. So let's go take a look in a second. Some of the things that we'll be looking at in this episode, obviously we'll show the live trading results. You can see it on the platform and everything. And look, in relation to it being live trading results, I actually could have run this on a demo account in real time and it would be basically the same thing, but I guess look, it just does hold a little bit more weight for people when you do run it live. So for me running it live, I understand how the model works. I actually use a lot of these types of ideas in my own other models, so I'm really across it and understand how it works. But certainly encourage you to run things on a demo account to make sure that you understand them before you trade anything live. And again, look, I really wanted to show what is possible with automation. Automation isn't some kind of magic. It's not a holy grail, but what it does do is it will place the trades for you based on the rules that you've set, and that allows you to not have to spend really a lot of time in front of the computer, and to manage the models and the trading a lot easier. And it also gives you the opportunity to do a lot of things that you can't do manually. So we'll talk about a little bit about that as well. First, what I'll do is I'll pull up the actual results. So here's the performance of the model over the last month. This here is inside X Analyzer, which is part of TradeView X, our proprietary trading platform that we've built, if you didn't know. When we built the model, for those of you who don't know, that gets built inside the building component of TradeView X. We test it inside TradeView X as well. We've got a great testing engine that can test multiple products and timeframes simultaneously, and it's got lots of data in there, of course, as well. And then what we can do is we can actually analyze the test results, but in this case these are the live trading results that we've pulled into the analyzer. So as you can see, I'll go through some of it. I did run it on 2 different instruments. I ran it on gold here, and also ran it on oil. If you hover over it, you can see the breakdown of the trades. So 13.04% of the trades were on oil, and the bulk of it was on gold, around about 40 trades. You can see the results here in terms of percentage P&L. So fantastic result over the month. We're up 21.07% with a maximum drawdown of 1.26%, which really is a great result. We really did have a great month trading this model. Is 21% per month a typical result, or is it achievable every month? Look, it might not be, but these are actual results that we did get this month, and we'll actually have a look at the charts, and you'll be able to see where the models started trading, and we'll be able to perhaps have a look at why we were able to get those type of results in the month of May. We started at the end of April, so you can see here actually 0.07% of the returns were in April, the bulk of it in May. Also a couple of other things to look at here. You can see the number of wins versus number of losses, the number of consecutive wins and consecutive losses, your average win and average loss percentage. A good one here I thought was your expectancies of $4.58 average per trade. Okay, your average weekly P&L here, again 5.27% per week average. It's a fantastic result, and look, average of 1.05% per day. I mean, that works out great. It'd be fantastic if that would keep on going. I'm not saying that it will, but we did have a great month of May. Alright, there's other things that you can actually break down in the analyzer as well. You can break down, find out when most of the trades were taken, what sort of times, all that kind of stuff. I'll leave that for you guys to have a play around with if you want to run this model, and you can have a look yourself. You can also do all this with the testing results, of course, as well, if you're not actually running it live. Alright, so I'll bring up the MT4 platform now, and I'll just show you the model running. So here it is. It's actually still placing trades now. As I said, I put it on a $1,000 live account, so you can see here at the top it is a live account. Here we have basically we have all the details, the balance, the P&L, etc. So you can see here it's got a few trades open at the moment. It's actually got 2 trades open here on oil, okay, which is it's got this trade here, and then it's got this trade here, and we've got another trade here open on gold. So you can see this oil trade is both of them are in profit. What it does is part of the model will add to trades, and this gold trade here has just 1 trade open, and as the market continues lower, if we get the long signal again, then we'll enter into another trade, because it also averages into trades. So if you want to see how the model actually works and you want to know all about it, what you need to do is go and watch episode number 188. Actually, we started building that model in episode number 185. So go back, watch 185, build it through to episode 188. If you don't have access to the episode, if you're not already a member, then you can get access to the Trading Talk series from our website. Just go to tradeview.com.au and in the product section you can find Trading Talk. And what we'll do is we'll put a link directly to that in the video description if you're on YouTube, or we'll put it on the insights page of our website if you're watching the video there. So let's have a bit of a look at how I decided to run this model. First thing I want to show you is what we have here. We have it running on the 5-minute chart. This model runs on it can pretty much run it on any time frame, but I like to run it on 5 minutes. But also what we do, and one of the things that I have built into other models, is I decide which direction I'm going to run some of the models. So in this particular case, both the models are running long, or it's running long on both products, and I'll show you why. Well, just show you why now. So what we could do, we could pull up a daily time frame, and we can have a look. And actually what I've done here is, because we're actually in lockdown in Melbourne, I pulled this platform up on my PC at home. We're actually working from home today. All the trades though, if you want to see where they're all placed, are actually on the computer at work, so I unfortunately can't show you where they were placed on the chart. But they started from, remember we looked before, it was around the end of April. So if we go to gold, it would have been around about here somewhere, so probably one of these bars here, if you can see that, is when it started. And then likewise for oil over here, it would have started somewhere around here, one of these bars here. So the reason that I decided to run both these models long, I have rules built into my other models to determine when I want to run the model long, and this isn't the exact rule, because that you have to watch the trading talks for and see how I do some of that stuff, but it is something like this. Basically here I've just got a longer period moving average. This is a 60 period, and I'm just going to keep one simple rule. If the daily close is above the 60 period moving average, then I'll run the model long. Okay, so all up here I can run the model long. Here you can decide to maybe stop the model if you wanted to, or you probably wouldn't start it up at this stage. Here we actually broke through that 60 period moving average around about where I got in, and that's when I started running the model long. So this particular type of model, again, you have to go back, watch the episode, but the way that it works is it will add to trades as the market goes in your favor, and it will average into trades as the market goes against you. So basically what will happen is, and this is why we got such great results, because the conditions suited the model perfectly. What happened was, number one, we decided that we wanted to run it long because we're above the 60 period moving average around here, and around here somewhere it was for oil. And then what's happened pretty much straight away, we've maybe averaged into a few trades down here, and then we've got a huge move in our favor. So it's basically the market's kept on going up. We may have stayed in the trades that we'd averaged into. We may have taken profit on some of them, but any of the ones we added to as well, either they kept on going, or when the market pulled back, we would have got stopped out in profit on those trades as well. So again, you have to watch episode 188 to understand exactly how the model works, but that's why we got such great results, because it is a really directional type model. Okay, a couple other things to note. This account is running on 1 to 30 leverage, which means that you have to put up quite a bit of margin for the trades that you take. Now, to trade gold at 0.01, which is the smallest size I could trade it in, it will cost you about $150 of margin per position. So that means if you've got a $1,000 account, you really can't open up too many positions before you start to get in a little bit of trouble. So that was something that I considered running this on such a small account. One of the things I did to try and reduce the risk is that in the settings, I can actually bring up the settings here. In the settings here, I have an average in profit setting, which determines the space between averaging in the trade. So for example, if you're going to average in every 10 points as opposed to averaging every 50 points as an example, then you're going to end up taking a lot more trades. And if we take 3 or 4 trades, we're pretty much starting to run out of margin. I'm probably going to get a margin call. So therefore what I did was I put a reasonable space in between the trades so that it didn't average into a lot of positions. Okay, if I had a bigger account, then I probably could have let it average in a bit more often, which would have still got a great result, would have been a bit different. So that was one thing I considered. Also what I did is when I started up the model on oil, I also started at 0.01. Sometimes the contracts between the brokers, they work a little bit differently between different brokers. So 0.01 is actually very, very small size on this particular TMGM account. And basically you could get a day's move in your favor and you'd probably make about $1. Okay, make or lose $1, and the margin required was only about $10. So that was very, very small. Once I had made a little bit of money on the model, then I actually increased the size to 0.1, which was probably a little bit more relevant. I actually noticed here, because like I said, I set this up from home and I actually did put the models on it just to show you some of the settings. I realized that I'd still left the model here set at 0.01. So I've got one position open that it had and the one it placed at work, 0.1, and one open at 0.01. What I'll actually do, I'll just close this one out now and I'll change the settings over later on. So here's the thing as well, look, with automation, I mean, this is trade is in profit. Have a look. 3 cents profit. There you go. I'm just actually going to close that one out and I'll get it to take the trade in the proper size so that the model runs properly. But what it had done is it had added to that previous position. Another interesting thing that you can see at the moment, I'm just going through a few things that I sort of look at and that you can look at as well. We always talk about diversification with models. I mean, this is a really simple example, but here you can see that this oil trade is in profit, this gold trade is losing money. I mean, we can open it up again here. So we're up $13 and 80 odd cents on the oil trade and down $5.68 on the gold trade, but overall we're up $8.39. So you can write all sorts of rules into your models. If you want to look at the account or look at a group of trades and then close them out when you've made a certain amount of profit, you can do things like that. That sort of stuff is up to you. But what it means is, look, I guess that's the idea. Quite often you'll have some models or some instruments making money, others might be losing a little bit of money, but because you're diversified, you don't have a big P&L in either direction. So I guess that's some very simple diversification that you can have a look at there. Another one of the key things I think I wanted to point out from this model is that what happened was we did get lucky early on in that this gold trade, which I'll pull up. Like I said, the gold trade, it got into a small drawdown at the start because I probably got into a little bit of drawdown on this bar here. Make it a little bit bigger. Probably a little bit of drawdown in this bar here, but after that, the market has more or less gone in our favor. A little bit of drawdown here, and then it's really continued in our favor. So because I was able to make a little bit of money at the start, that allowed me to consider taking the oil trade and increasing the size on that. And also, look, if I wanted to, I probably could have potentially reduced the space in between the where it averages in, because I had a little bit of money that I'd made now that I could risk. So I might have looked at that when it had made, say, $100 or about 10% on that account. They're just some things to think about. Basically, if you haven't made any money, what we don't want to do is we don't want to take a lot of risk. Once you've made a little bit of money, then it's up to you how much of that money you've made that you now want to risk and on running the model. So you can actually change some of the parameters as long as you understand how they work, and take on a little bit more risk once you've potentially made some money. Okay, so that's that's that there as well. In relation to running the model, any other sort of management, look, I really haven't done too much other management other than that. The things that I managed were, I looked at how much margin I had and how many positions I should get into given the small size of the account. If I had a bigger account or I had a higher leverage account, then I would have thought about it a little bit differently. That's pretty much all I've done, except for sort of keep an eye on it. The great thing about automated trading, which I've always loved, is that all those trades that were placed, they were all placed automatically. So I didn't enter any manual trades. All the trades were automated. I'll pull up again just this here. So I'll pull this up. There was total of how many trades? Let's have a look. 46 trades. So 46 trades over the month. A lot of those trades happened while I was asleep. So, quite often I might go to sleep and be in, say, $10 drawdown or something like that, and I'd wake up and it would be in $10 profit. And it's placed trades, it's closed trades, it's opened new trades, and I've had absolutely nothing to do with it. Okay, so that seriously is the great thing about automated trading. You really can trade 24 hours a day, 5 days a week, or however often your market is open, and that's something that you can't do manually. So that's something that I've always loved. Like I said, all the trades placed automatically. I don't have to think about it. The one thing that I'm really looking at was, is the market moving in my favor, as in my direction. Again, you have to watch the episode. So if you've got episode 188, go and watch that. If you don't have it, you can go by the Trading Talk series. Again, we'll put the link in the description. And not only will you have these episodes, but there's also, I think this is episode 196. So there's this plus 195 other episodes you can watch in different models. But basically, all I needed to worry about, if you understand this model, is was the market going up? And basically, from a daily perspective, how big were the moves against me? And here, they really weren't very big, hence why it's got such great performance. Here, this was, I wouldn't say it's a big move, but it was bigger than the moves that we had on gold. We did get into a little bit of drawdown on any of the positions here that we had on oil, but we're also trading quite small, and we didn't get into a lot of positions, so it didn't really worry me. And also by that stage, it had made some money as well, so no real problem there. Next things to look at here, we had a gap up on oil this morning. We've got a little bit of resistance here. If that continues to move higher and break it, that's going to be really, really good for this model. It's going to keep on entering into positions. Once it enters another position, basically what it does is you have to watch the model, episode 188, of course, but effectively what it does, it will trail this one. So once it opens another position, more or less, you've locked in some profit on that one. So if the market continues to move in our favor, fantastic. Once it opens another position, if it pulls back, then that's not really an issue either. It will close any of those open trades out at a certain point. Again, you have to watch the rules. On this gold model here now, obviously either the move's going to continue higher, or if we get a little bit of a pullback, it's going to start to average into positions, and then we might need to make a decision on what we do with that one. This model, because we sort of showed it in episode 188, it really is a concept. Technically it is a model by itself, but it is a concept. But there's certainly other management elements that you can add to it, and we do add them to our models, but we haven't done it in this particular episode. So any of those things where if I want to cut it when the whole account loses a certain percentage, I would just have to do that manually, because I haven't built that part of the automation into this model. The other thing I guess it's important to note is when I did start this, I put $1,000 in, and I was happy to lose 10%. I wasn't happy to lose 10% rather, but I was prepared to lose 10% to run this. So we never got anywhere near the 10% drawdown. As you can see, we had, let's have a look, 1.26 was the maximum drawdown, so we never really had to worry about that, but I was prepared to lose 10% just to see if I could get the model running. Again, look, we had a great run. We made 20 odd percent. I couldn't really ask for any more, so can't promise anybody that that's going to keep on happening, but I did want to show this episode because these are literally real results. It is a live trading account. As I said here, we did run the model, it did place all the trades automatically, and guys and girls, this is really what automated trading is all about. So I really hope you enjoyed this episode. If you've got any personal questions, or you've got any questions of your own that I haven't answered here, please contact me. I'll pop my details up. Here's my details here. I'm usually pretty good on Skype, tradeview.ec. I do manage the day-to-day operation of the business, so if I don't reply straight away to you, please don't be upset. I will get back to you as soon as I can. You got my email there, edwin.cornelison@tradeview.com.au. Love to hear your questions and feedback. Hope you really enjoyed this episode where, like I said, usually we don't show performance, but I mean, this is real performance. It is a small account. We did get some great results. Hope you can understand why we did get the great results, and especially if you've watched the episode, you'll really understand how the model works and why it performed really well in these conditions. And that's basically why I switched it on as well and put it on the small account, because of, I guess, where we were in the overall picture of the market on those products. So I did sort of think about that. And I hope it gives you a little bit more insight into running automated models, just what's possible. And you can build all these things inside TradeView X. You can test them, you can understand them, and you can start running some models of your own. So again, really hope you enjoyed this episode. To those of you in Melbourne in lockdown, stay safe, or if you're in lockdown somewhere else in the world, I'm sure places still are. We've actually had it pretty lucky here, broadly speaking. Stay safe. Thanks for watching. Till next week, all the best with your trading.